Hi, Beth Riedensdorf with the Reby Homes team with your January 2021 monthly market update for the Phoenix metro area. Let's start with a look overall at 2020. More homes were sold last year than in 2019. The total for existing home sales in 2020 was 5.64 million, which is a 5.6% increase from 2019 and the most since before the Great Recession. The National Association of Realtors shows that total housing inventory at the end of 2020 totaled 1.07 million units, down 6.4% from November and down 23% from a year ago. Unsold inventory or available inventory sits at an all time low of 1.9 months supply nationally. That's down 2.3 months in November and down from the 3-month figure in December of 2019. Our local Phoenix market ended 2020 at 100,099 units, which is just under the highest record set in 2005 at 103,177. That sharp increase in sales will reflects the high demand that is continuing into the start of 2021. So much so that the number of new listings is also at its all-time low. In 2019, during the same time period, there were 19,628 new listings compared to only 11,785 in 2020. And today, incredibly, it's plummeted to under 5,000 active homes available to sell. Moving on to home price appreciation. Historically in our country, home price appreciation has run about 3.8%. Well, CoreLogic is weighing in on the low end and predicts a 3% appreciation next year. And the average of these 7 forecasts is about 5%. Now, home price appreciation is going to vary from market to market, of course, and price will always be a factor of supply and demand. Overall, prices increased 9.2% nationally last year, while the Phoenix metro area was 12.3%. Under $300,000, the price per square foot went from 147.52 to 172.49. In the 300 to 600,000, it went from 173.44 to 199.20. The 600,000 to a million went from 227.18 to 253.91. And in the over $1 million, it went from 370.54 a square foot up to 426.84. A hefty increase. And due to what? Well, limited supply and more demand. With such high demand and such low supply, multiple offers and competitive terms, well, they've increased. And while multiple offers are driving prices well above list price, it may not be as much as you are hearing about. Let's take a look at January 2021. 37.4% of all closings were above list price. A look at the price range breakdown shows that in the $400,000 to $1 million range, it had between 18% and 35% of all the closings were above list price. But the median amount of over list was only $10,000 to $11,000. And in the under $400,000 range, it was approximately 40% for closings over list price, with the median amount between $5,000 and $8,000. Interest rates, well, they're something we all wonder and talk about. Here's a latest look at projections from Freddie Mac on the 30-year fixed interest rate. The orange shows where we've been from 2016 to 2020, and the blue is showing the predictions of where we're going. The reality right now is that experts are forecasting a great rate environment in 2021, certainly in the low threes, whether that's 3.2 or 3.5. Historically speaking, as we can see here, today's interest rates are very advantageous, which will cause more people to say, hey, now is the time to buy. Well, no doubt affordability is impacted as rates rise and as prices rise. As Mark Fleming notes, rising interest rates reduce home buyer power and affordability, but are often a sign of a strong economy, which increases home buyer demand. By any historic standard, today's mortgage rates, will they remain historically low and will continue to boost house buying power and keep purchase demand robust. The latest interest rate projections going all the way through the first quarter of 2022, you can see there's a range there of 3.1 on the low side and 3.55 on the high side, but all together showing a very good rate environment. Well, many buyers are considering what rising prices mean along with the low interest rates. What does that mean for home affordability? Let's look at a $350,000 mortgage at a 2.7% interest for a 30-year fixed loan. The monthly payment for principal and interest is $14.19 and 59 cents. Now, if the interest rates go up to 3.5%, that same payment goes up to $15.71.61. So what if interest rates remain at 2.7%? It's not likely through next year, but what if it did? Well, if appreciation, which was 12.3% for Phoenix, well, let's just say appreciation went up to 10%, then that same home 10% higher is now 385, and that same 2.7% interest payment is now 1561.55. And if both appreciation and interest rates increase, the difference jumps another $100 to $200 per month, depending on how much appreciation and how much the interest rates increase.